What's up, everybody? I'm Jared, the Stacking Surfer, and I've got an awesome interview today for you guys. But before we get started, if you haven't done so, please hit the subscribe and bell icon and also the thumbs up. That'll keep the algorithm going so that people know that the live stream is going. Also, for some of you that may not want to watch the full video or you might not have as much time, I will be doing a recap of this later this week. So look for that as well. And let's get Andy up here. Andy Schectman is the president and CEO of Miles Franklin. And I'm excited to have you, Andy. It's been a couple weeks. I know you've been busy and you've been launching your new platform. So welcome.
Thank you. Appreciate it. Yeah, it's been a really crazy couple of months for me. We brought Michelle McCory on to run our media division, and we're thrilled to have her. And her and I will do shows together every week or so. She'll do 2 or 3 her own, and we'll do panels and all sorts of stuff. Wide-ranging topics, not just about gold. She's very well connected into the Bitcoin community, but has an open mind. And I've always felt that if we learn more and more about less and less till we know everything about nothing, what good does it do us? Having an open mind. My parents were hippies. So I was a jock who grew up in a home with an older sister and hippie parents. So the stuff I saw is right out of that 70s show, only the R-rated version of it. And so a lifestyle and open-mindedness is something that's always come easy to me. And regardless of the way that I feel, I'm a big advocate of learning. It's kind of like going to being accused of murder of your wife, and your attorney says, well, I don't need to understand the plaintiff's argument. I just want to hear yours. That's all that matters. And I think you need to understand both sides of the coin. In fact, Robert Kiyosaki, my friend, says, no, Andy, coins have 3 sides, the front, the back, and the ridge. Finding your place somewhere in the middle even is kind of where I end up. And so that's what we're going to attempt to do, kind of show both sides of everything and the middle, and see where it falls. But I appreciate it, and I do like coming on. It's hard for me with sometimes being regular with all the stuff we're doing, including running a company and trying to take care of my clients, and actually being a father and a husband and all of those things gets in the way. But you're one of the few people that I really do like coming on with on a regular basis, and it's always good to be here with you.
Well, we appreciate it, Andy. And I know everybody loves having the live streams and coming here. So for those of you that are just coming on right now, just a quick reminder, put your comments in caps. It makes it easier for us to see them. I know you guys like to have a lot of fun in the chat, which is totally good. Do that. But if you see all caps, then we know it's easy. We know that it's a question for us as well. So Andy, to kind of start things off today, I've been watching a couple of the shows you've done recently, and also just some other shows that are out on YouTube right now around gold and silver. And we're starting to see a bit of buzz talking about a gold revaluation. It's not the first time we've talked about it. It kind of pops its head up here and there. But you had also put a chart out on X recently talking about the federal debt and where that's going. And I've pulled up a couple other charts that we can pull up today too from the Fred that basically goes into medium consumer price index. So we've got inflation, what's happening there, what's happening with total public debt, M2 supply, and then also the federal surplus or deficit that's coming into play. And I think all 4 of those charts tell us a story of what's starting to happen again. And it looks like what happened a couple of years ago. It looks like it's starting to repeat again. And I think the big, beautiful bill is one of those catalysts that's starting to kick inflation back up again. And I'm starting to see it in prices here in California with food, and just other services are starting to creep back up. But I wanted to kind of start off with that, asking you, is a gold revaluation something that can really happen? And if it is possible, is it something that you see happening at $3,000, $3,500, $5,000, $10,000, or much higher? What do you think the Fed? Well, I guess it would be the Treasury. Where do you think the Treasury would be going with this?
Well, I think it's a bigger picture. I think the stablecoin initiative is done to fill the void of all of the Treasury demand we've lost on the back end of the curve, but they're going to stuff it into the front end of the curve. They're going to do very short-term duration issuance of treasuries off of stable coins, which will fill that void. And I think they're going to do that in spades at the same time, as Luke Roman says, anesthetize the back end of the Treasury market. And I think they will peg the back end of the Treasury market to gold. And I do think it will be at a much higher price. In fact, Luke even talks about letting the price get to 7,000 or 8,000 organically and then revaluing it to a much higher level. Now, it's important to remember, as we've mentioned on your show before, Jared, that gold is held on the balance sheet of the U.S. government in what's called the revaluation account. That's the name of it. Of course, you can't make that up. And every $4,000 increase in the price of gold would result in $1 trillion given to the Treasury General account. I'll explain how the whole mechanism works. It's as simple as a Treasury Secretary saying to the head of the Federal Reserve, Jerome, hey, Jerome, put the price of gold at $24,000 an ounce. Now, who would that benefit? Well, it would benefit all of the central banks of the world. It would arguably benefit the United States government. I would argue they're probably behind the massive importing of gold that we've seen since November. North of 100 billion that we know of since November. And there's probably a whole lot more that they're buying through proxy banks around the world, in Switzerland and in London, in Singapore, wherever they're doing it, or even through local and artisanal miners, as we find now that the central banks have admitted to doing recently, to disintermediate the marketplace. Same thing China's been doing. But anyways, the idea is you bring back all of that gold. Now, when you realize that we've weaponized the dollar and that we are inflating it away at a reckless abandon, people say, well, what do you mean by that? How do you know we're inflating? Well, first of all, the CPI is a lie. It should be called the CP lie because they massage the numbers to make us believe inflation is under control. John Williams of Shadow Stats, who just uses the way the numbers used to be measured, previous administrations would say you add an 8 to that, and it's about 11% inflation, if not higher. But the point is simply this. We weaponize the dollar. We have irresponsible fiscal policy and brain-dead monetary policy. They just came out with their estimate for the third quarter in terms of the amount of debt they'll need to issue. $1 trillion is the number in 90 days. They're going to need $1 trillion. That's at least $3 trillion a year in deficit spending for the next 3 years. When you realize that in 3 years, 2028, we need $28 trillion just to pay for the bonds that come due that we've already issued. Add the $9 trillion in deficit spending minimum, you're at $37 trillion. In the next 3 years, we'll take in $15 trillion in tax revenue. So we're just over 1/3 of the way there. How do you continue to do that? Well, you print, you inflate, which is what they have to do because there's no demand for our treasuries on the back end. In fact, all these countries are selling, right? And so we're supposed to believe that the United Kingdom is now number 2, surpassing China. It's two broke guys leaning against each other to not fall over. You know, the UK is one of the most indebted nations in the world, only second or third to the United States. So one debt country buying the debt of another broke country. And so here's what I think they're going to do. I think they will let gold rise organically, and at some point they will revalue it to a level high enough. And the reason I say 24,000, and that's the number Jim Rickards comes up with, and he has a metric of dividing M2 or whatnot into the price of gold, and he gets 24,000. So if the Treasury Secretary did say to Jerome Powell, let's say gold's at 7,000 or 8,000 a year from now, and he says, go ahead, push it up to 24, it would work. Or whoever the Federal Reserve Chair is at that point, it would work without congressional approval. You just simply go do it like this. Hey, head of the Fed, put gold at 24,000. Who does that benefit? Well, it benefits the U.S. for sure, but it would also benefit all of the central banks who have been buying gold hand over fist. So you're not going to get a ton of pushback there. But when you look at the mechanism of doing that, in essence, what you would be doing is wickedly devaluing the dollar, which is something they're going to want to do. You already see the dollar down 11%, and Trump has come out and said, in fact, let me just see if I can find the actual statement that he just came out and said. Where is this darn thing? He said something that I thought was, here it is, I think this is it. I just thought, he says, Trump said he liked a strong dollar, but you make a hell of a lot more money with a weaker one. So when you have a strong dollar, one thing happens. It sounds good, but you don't have any tourism. You can't sell tractors. You can't sell trucks. You can't sell anything. Manufacturers will be the first to benefit, from a falling dollar. Japan and China fought for weaker currencies for decades and were able to dominate markets over the years. Now, it doesn't sound good, but you make a hell of a lot more money with the weaker dollar. So if they bring all this gold back, like we've seen, huge amounts, 100 billion that we know of, they devalue the dollar by revaluing gold. So the dollar goes way down. In other words, I think they're going to sacrifice the dollar, Jared. They're going to inflate it away to save the system. So you have the stable coins pegged to the short end of the market, which keeps the engine going. You put zero coupon on the long end, zero bond rate, zero, and peg it to gold. So deliverable in gold at maturity, so that the more reckless our monetary policy is and irresponsible our fiscal policy is, will only increase the value of gold at maturity. So you can have a zero coupon bond on the back end. You make it redeemable in gold. You revalue the price of gold way higher, which devalues the dollar. Now you are in the perfect position to do what? Bring back your manufacturing at a low value of the dollar and low borrowing costs. In fact, zero borrowing costs on the long end. You bring back your manufacturing. You say to the world, this is what we need to do. You say to the U.S., we need to do this in order to give our children and grandchildren a future. We're bringing back our manufacturing at zero borrowing costs and a weak dollar, which stimulates the exports to begin with, but allows us to reshore, build the manufacturing capacity, train the workers, do all of these things so that we actually have a chance to grow our way out of this problem. When you have the indebtedness issue that we do, there's only one way to pay for it, and that's print or default or growth. And the growth is out of the question until we bring that stuff back. But unless you have a weak dollar and low borrowing costs, you can't do it. Furthermore, how do you pay $28 trillion in long-term debt obligations that are due in 3 years if you only take in $15 trillion in revenue? So it's an issue where I think the stable coins will keep the game going, and then they peg gold to the long end with a zero interest rate coupon in order to bring back manufacturing to grow our way out. So yes, I do think they will revalue gold. I truly, truly do.
Okay, so Andy, looking at that, because that was good. I want to bring up a couple of these charts that we were just talking about too for people, so they can see them. So this one right here is the CPI, right? I think everybody believes that it was much higher than 6% here, or 8%, I think is what it's showing on here, at its height. But we're seeing that it's starting to tick back up. So that was one thing I wanted to point out here is we're starting to get it moving back up again. Yeah. So we've got that. I'm going to quickly jump through a couple of these guys. It's just the way that that we have to do it on here. The other one I wanted to show here is, I think this is kind of an interesting one here too. This is the surplus and deficits over time. So if you look at that top line at zero, that means that the federal government is neutral. It's bringing in the same amount of money as it's spending. And when you see this big, huge dip here, that means we were going way in the hole. I have to put my glasses on to see it here. So we were going way in the hole here to, let's see, we went down almost to $3.2 trillion, $3.1 trillion. And right now we're still sitting at about $1.8 trillion in the hole. So that's not good. And then let me bring up just a couple more real fast. All right, so another one I wanted to bring up here that you had shown on your post too was the overall debt, total public debt right here. And I think these are all important for you guys to be aware of and to look at, but that number is going up, and it's going up a lot. And if you were to pull up credit card debt, if you were to pull up mortgage debt, if you were to pull up student loan debt, everything's just skyrocketing for everybody. And so, Andy, I think what you're really bringing up here is, we really need to figure out something as a country here to figure out how to stabilize things again, right?
100%.
Without 100%.
That, and how do you do it? How do you do it with inflation on the rise?
Yep.
Without raising interest rates, it blows up the system. You peg the back end to gold with zero coupon. Issue stable coins for the front end to keep the engine going. And that synthetic demand replaces the organic demand that we once had when we had trade surpluses and weren't involved in wars all around the world and produced things and were revered. A lot of these things are no longer part of the issue. or part of the the ecosystem. I need to ask you to hang on 1 second because I can see they didn't plug in my computer and it's about ready to die. I need to go grab something. Give me 10 seconds. I'll be right back. I need to go grab a plug-in to plug this darn thing in. I'll be right back. Give me a second.
All right, so we're taking a quick little intermission, guys, here real quick. I'm going to drop Andy down as he moves his microphone there. So we don't want his computer to die on us. So we'll bring him back in a second. So just a couple quick things for you guys. I have my live streams every Friday. We'll do free silver when we get up to 100 thumbs up. So you guys hit that thumbs up. We've got 57 people in here watching. Hit that and we'll do some free silver on my live stream. Just another quick plug here. I've got a new mentor program. I'm going to be canceling the programs out on YouTube as far as the membership levels. We're going to be moving everything over to Slice. We're going to give that a try, see what happens. I can have better communication with you guys on there. And there is a discount right now if you put in Stacker1. The link is down below in the comments, not comments. Well, it'll be in the comment section, but it's down below in the description. And you can join that. And that's where you're going to have access to the trades I'm making in the market. Also, if I'm buying gold and silver, and I'll be sharing some of my personal tips and tricks as well. All right, and then while Andy's waiting here too, he'll be back in just a second, guys. This is another thing I just want to point out to you guys. So if you're looking for a good reputable place to buy gold and silver from, as well as platinum, Miles Franklin is a great place. It's a company that Andy represents and owns, and I've been very pleased. I've bought several items from him. So has my dad and a couple other friends, and we've all had great service. And so if you need to get a hold of Andy, I would recommend just emailing him, info@milesfranklin.com. Let him know Stacking Surfer sent you. There's a small referral that comes back to the channel to help us keep the lights on. And at the end of the day, you're going to get some great service. And just keep in mind that their website has certain pricing. The pricing is even better when you email them and you talk to them individually. And what's great is you get white glove service, which is awesome too. So I'm going to bring Andy back in just a second, guys. He's just putting the microphone on now. And all right, I'm going to bring him back up to the stage here.
Sorry
hey, Andy,
about that. Always,
are you good to go?
Freaking dilemma. Yeah, I'm good to go, man. That's sorry. They didn't plug. They were in here doing some stuff last night. While I was gone, they came in at like 9 o'clock at night to do stuff, and they didn't plug my computer in.
No problem.
Which really sucks, but now it's plugged in, so we're good to go, bro.
It's always the fun part of doing anything live, guys. Demos live, shows live. Things happen. We have to keep rolling with it.
Oh yeah, I'm used to it. It's been nonstop. Usually it's 2 dogs barking, but I'm 3 dogs barking. But now I'm in the studio that we are finally getting up to speed, and they had to update all the software and forgot to plug my computer back in, so that really sucks.
No problem.
Well, we're good to go, my man.
So looking at this potential gold revaluation, right? To me, it seems like something that's inevitable, that's going to have to happen. Right. We hear people talking about a gold peg, going back to a gold peg or going back to gold backing. Maybe that happens down the road, but this is something that's very intermediary that could happen much more quickly. How fast do you think this could happen? We've got the new stablecoin legislation. There's already stablecoins that are out there. Do you see the government starting to transact in stablecoins? Do you see maybe, some kind of rebates or payments or stimulus, if that comes again, being done in stablecoins? How do we start, in your opinion, how do we start seeing this engine starting to move? And do we wait until July 4th? Like Judy Shelton has suggested, with these bonds potentially coming in, on the anniversary of the Declaration of Independence?
Well, I mean, I just think that it's the government really wants the stable coins for sure, because it's going to give juice to the treasury market. You'll see banks starting to issue them. You'll see private institutions like American Express. They'll all start issuing stable coins, which will have to be backed. That's the legislative part, by treasuries and monitored. And so, the banks, I suppose, will kind of be happy. They'll just get all the deposits that go in and issue the stable coins, and then they'll buy treasuries off of it. And, at this point, I think it's going to supercharge it. You have to do it in order to demand for treasuries going when the rest of the world that has traditionally financed our debt is moving the other direction. So I think it'll happen faster than people think. And it will be a trend that doesn't go away very soon, to be honest with you. And it's interesting when you talk about potential pitfalls of something like this legislation. You know, I've talked a lot about the bridge or the bridge technology that central banks are using cross-border in the BRICS network. And I mentioned on your show, I believe, a couple weeks ago that it is my belief once Lavrov, the Russian finance minister, said that they're going to open it up to non-BRICS nations. The first thing that I said on a podcast was they're going to open up to the Belt Road, which is 75% of human population, 50% of global GDP. They're not in the BRICS, but they're very closely aligned with the BRICS, especially in the way they're producing commodities and trying to industrialize these under-industrialized countries and bring their resources into the mix. Well, I watched an interview last night. Let me give you the guy's name. I think everyone should check it out. The interview was just wicked. And his name was Bruce, Andre Michalshin. Anyways, what Andre said is he's the CEO and he is the founder of BRICS Pay. Now, BRICS Pay is the B2B side of the bridge network. It's the B2B, business to business, small bank to small bank, consumer to business, or bank or business to consumer. It's like Visa, basically. And he said a lot of interesting things. We're not trying to antagonize the West. We're not trying to create a revolution, just an alternative. And we'd love to work with companies like Visa and American Express, but we can't because of the sanctions, on and on and on. But he said some really interesting shit. The first thing he said to me, or not to me, he said, I was listening, was that right now they have delegates meeting in China right now trying to, with the idea of to introduce this BRIC Pay technology through the Belt Road. So you have and that was ding, 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 ding. So you have the bridge, bridge, which is now BRICS Bridge, which will be, using the central bank to central bank in the 150 plus countries in the Belt Road, plus the countries they already signed up in what are they called? The countries in Southeast Asia, what are they called? I forgot even what the damn name is that they're called. It's Asian countries. There's 11 of them in Southeast Asia and 5 of the Middle Eastern countries that represent 38% of global GDP. They've already signed up to it. Now they're going to open it up to other countries, which is what they're talking about is the Belt Road and the Shanghai Cooperation Organization and the Eurasian Economic Union. On top of these Asian countries, you're talking 90% of human population. That's going to be the central bank to central bank. This is the B2B and the person and the individual to the bank and to the business. And they said they're going to open it up to non-BRICS nations. So immediately, you're talking Belt Road and all these groups. All right. So the lady says, well, there's terrorist organizations out there, Andre. What are you going to do to safeguard that? And he says, well, because we're opening up to all of these nations, we're very cognizant of KYC, AML, and KYT. Now, what the hell did he just say? I rewound it because KYC I know, AML I know. I don't know many people who know what KYT is. Do you happen to know what KYT is? If you're watching last night, you might. You know what it is, though?
I'm not. I did watch last night, so I'm not going to say it, but I did not know either, and I'm in that space. That's
right.
The stuff we do.
And I'm in the space too. That's why I left my company in Minneapolis because we're the only state in America that licenses this federally non-regulated industry. We have continuing classes on KYC and AML. I didn't know what the hell KYT is. It's know your transaction. So this type of technology has in it, and I'm sure it's the same thing with the stable coins. It has in it the ability to know. And this is why when you go to the bank, they always say to you, what are you going to do with that money?
Yep.
And it pisses people off. But I guarantee you that they've been pushing this softly into the banks for a long time. They're trying to close the loophole around all of this. So while it is maybe the only way to get out of this problem without defaulting or hyperinflating, and that is to use the stable coins to push down interest rates on the front end of the curve to give synthetic demand, while they allow gold to come back, revalue it, and peg it to the back end to keep rates at zero, to bring back manufacturing. I mean, I see it happening. And if that's the case, you're going to see this just everywhere very quickly, in an effort to keep demand going for a country that is maybe 25% of its way to its obligations just by 2028. And those are the bonds that are in circulation, let alone everything else. So, yeah, I think it's going to be fast and furious, Jared. I really do.
So looking at that, Andy, I think a lot of people also have questions in their minds around what will this do to silver price, right? So if we have a revaluation of gold, if we see the stable coins coming in here to kind of shore things up a bit, and we see these gold bonds getting created, bonds that can be redeemed in gold with zero coupons, will that affect the silver price at all? What do you think will happen there? And then just as an aside to that, we had one question I'm going to throw up here real quick that came in already is, has anybody noticed that today's future settlement day and silver is down? I don't know if it's down right at the second here. I don't have it up on my phone at the moment, but let me see if I can pull it up here real quick. So we're showing silver down 2 cents right now. Normally this would be a day that we would see a lot of smashing going on. So just some thoughts around, how does this affect silver? Do they need to revalue silver? Does silver follow suit with gold, or is it going to be stuck down here?
Well, I think it's the end of the day today. I think the new contract comes on tomorrow.
Okay.
So I think they've already pushed the price down to the level that they were trying to keep it under, or close enough anyways. They put on a 440 million ounce short position, it's interesting, I'll tell you that in a moment, but whoever they is, because Bix Weir was talking about the fact that the commercial banks, their playbook is traditionally to short a rising market. And this time they didn't short the market as it went up to 39. He says it's a classification on the Commitment of Traders report that is other traders or unknown traders. They're masked. We don't know who they are, but the commercials did not short. Whoever the hell it is this stupid game that the COMEX continues to play. They did knock it down, and the commercials did put at some point a couple of weeks ago, they did put on 440,000 ounce short at 37.50. But then the price went up and they didn't short it. Someone else did, whoever that someone else is. Maybe it's the BIS. I don't know who the hell it is, but whoever it is, they're stupid as a mud wall. So at the price right now of roughly, what do we got? Roughly on silver,
38.19 or so.
Yeah, so they're roughly $500 million right now in the hole. Not quite. No, half that. About they're $250 million. About $250 million that they're bleeding at when it was at 37.50. That's when 440 million ounces were sold short. But there's a 90% correlation between silver and gold throughout all of history. I look at silver right now from a technical standpoint to where gold was a year and a half ago. I think it's ready to explode. And then you look at what's happening in London, as an example, with lease rates that have blown out to 8%, with exchange for physical premiums that have blown up by 250% in 2 days last week, where most of the last 2 weeks there were zero shares available anywhere in the market to buy of SLV, to cover or to short. All of this screams of tightness in the silver market. And when you realize that in London right now, that the platinum lease rates, I know you asked me about silver, but it's tied in, and it's tied in because the platinum lease rates right now are nearly 30%. And the head of the what am I trying to say? The head of the Japanese, I guess it's the TOCOM, the Tokyo bullion market, he came out and says that in his mind, London appears to have virtually no physical platinum available for delivery. And he says, I'm going to read it here. He says that it seems that there is really no platinum in local London or Zurich, yet continued trading of nearly 3 million ounces per day of London promissory note cash contracts for immediate platinum ownership and delivery is something is about to break. And he goes on to say that if you're paying 30% interest to borrow, you might as well just go out and buy it. But really what he's going on to say is that, and he also said he's never seen a time. He used to run the trading desk for ICBC, Chinese bank, but he says the revelation of this and the frailty of the platinum market will knock on to the London Metals silver market, and the rates are there are 7 to 8% lease rates. It's going to shine a light on it. In other words, all of these markets in platinum and gold and in silver that have been suppressed in London and in New York for such a long time is being exposed by these big traders that are global, that are sovereign wealth funds for Saudi Arabia, for China, or for India, or for Russia, whoever the hell they are, they're standing for delivery. And they are using the stupidity of the West and their continued manipulating of the market to drain what's available. It's changing. The market is not behaving anywhere near like it used to. And if you see a 7% 1 month lease rate for silver, that's something I've never seen before. So the market is getting very tight, physical supply. And I would expect that if gold goes to the moon, silver will slingshot. And look, if you just use the silver to gold ratio, you got all the banks saying $4,000 gold by the end of the year. If you realize 50 to 1, it's been higher than that on par for the last 150 years on average. That puts it at $80 an ounce. Even at 70 to 1, which is way higher than its average for the past 150 years, you're at 60. So yeah, I do think that silver will go much, much higher than people think possible. And from a standpoint of technical analytics, it's right where, almost identical to where gold was just about a year ago. We could expect it to break through the resistance, just like gold broke through 2,200 and then went off to the races, gaining another 50%. I would say that's what you should expect to see, and maybe even much more because of the suppression of silver so overtly for so long that really, not to mention the resistance between here and 50. There are a couple of spots at 42 or whatever, but those numbers were only, you have a couple weeks or less of trading time cumulative in the two peaks before, went up, went down. And so those resistance levels are quite meek as far as I'm concerned. Once it gets up into, the upper 40s and does break through 50, if it follows gold's suit, well, you'd see it at 75 in no time. And 75 would simply be where we are right now, about where it should be based upon 150 years of price action. And that would still be, if we took 3350 divided by 75, that's a ratio of 45 to 1. That's about where it's averaged for the past 200 years. It's coming out of the ground at 7 to 1. It's still 6 times higher than it's coming out of the ground at. So is that reasonable? Yeah. And the whole reason that it's been held back for so long and underperformed is because it's far more significant than an industrial metal. It's strategic, and that is beginning to, I think, be understood. Jared, the only way you can successfully manipulate a market for an extended period of time is to push it in the direction that it is going. In my entire career, there hasn't been this level of understanding and demand at the upper levels where central banks and sovereign wealth funds are draining the world's exchanges before the public catches on. The public is record numbers in equities, record numbers, higher than the '08 crisis, about 54%, the retail investor. Virtually no exposure to commodities, whereas the big money is leaving in droves.
Yep.
The equities. Bezos is up to $6 billion in sales. He's been selling like crazy since the end of June, along with Buffett and Jamie Dimon and Zuckerberg, and all of these big insiders are selling. The institutionals, traders, have been selling about $2 billion a week since June. They're all leaving as the mom and pa's in full force, all in. What could possibly go wrong? It's the opposite in commodities. They're all standing for delivery at the highest level, and the public has no exposure. So you talk about contrarian indicators, never seen a better one. Silver to me and platinum are as good of a value as anything you could put your money into. In my mind, when you talk of asymmetrics, the lowest downside, highest upside, to me it's a no-brainer on both. I'd say the same thing about gold, but it's just because the public is completely asleep as it pertains to the merits of that and think the road to retirement is only paved with NVIDIA stock. By the way, 3 or 4 of their biggest traders or shareholders and board members have sold hundreds of millions of dollars worth in the past month of NVIDIA. So when you get all these insiders selling, what does that tell you about what they all think the future holds? I don't know. I'd rather be on the side of the insiders because information is worth a lot when you at that level because you know where the ball's going.
Yeah, I don't think they're just taking profits. I think they have plenty of spending cash, right? So I think they're reinvesting. Looking at the prices, platinum's up almost 0.5% right now. Palladium's up 1.7%, and rhodium is up 5.47%. I've seen rhodium kind of ripping it here the last little bit, and it's not one that I hold. It's not one that I invest in, but we're starting to see the metals waking up, and we've seen that going on for a while now. And to your point,
Platinum's up
Andy,
about 50% in the
yeah,
last
it's up a lot.
120 days.
It's up a lot. Rhodium's a hard one to find. Do you guys ever come across rhodium?
Yeah, we used to carry it I remember when it was 10,000 an ounce. Maybe, I don't remember what year it was, 07, 08, 09, 10, so crazy like that. Then they used to make this rhodium sponge, which was weird as shit. And then Baird, I think they are either a Swiss or a UK refinery, started making 1 ounce bars. And we can get them from time to time. The problem with rhodium is the spreads are enormous because the dealers don't want to hold it. It's incredibly volatile. Anything that can go from 10,000 to 1,000 or whatever, the dealers, they don't really like holding that because there isn't very much demand for them. So it's called the cost of carry as well. You're hanging on to something that's volatile, that doesn't get much play. It's not the best thing to own. But yes, with some time, I can find it. We used to have, maybe 100 bars in stock. I don't even think we have one. I can look as we're talking. But yeah, they do make 1 ounce bars. Let me see.
They do. So that spread is $500 right now on the bid ask.
I bet it at least, and that would make sense.
And then you got premiums on top of that, guys. So
right.
Anyway, it's one I wouldn't, if you have every metal you want and you got a bunch of money you want to go throw in there and you want to go spend about $8,000 on a rhodium bar, that might be something to look at. Otherwise, I'd totally skip it. But one other quick thing,
I'd probably skip it.
Yeah, I would skip it. I don't have any or plans to do it. JT Coins, thank you for the super chat. Just wanted to say hi. He's a great friend of the channel. And, Andy, like you're saying, silver's going to follow suit, right? As gold prices continue to go up and as they revalue it, what will you guys do?
No rhodium.
No rhodium? Okay. No. So you guys, I'd skip that one. It's not one to mess with, but it's interesting to see it starting to heat up after it hadn't done a whole lot for about a year.
I'm sorry, what was your question?
So what I was going to just say is, as gold continues to get more expensive, silver is going to pick up. It's going to be the more affordable metal for people to start picking up in droves. And so I do think it's going to follow suit with that. I did have a couple questions I wanted to just throw to you that are still relevant in here too.
Sure.
So this is a question from OC Stacker, also a mod for the channel. Thank you, OC. Question for Andy. This Friday marks the end of the deadline for the Trump tariff. Do you believe it will have any bearing on the price of precious metals? Thank you.
Well, I mean, putting tariffs on Mexico as an example, when the majority of the silver we get is imported, probably not the greatest idea. It sure could. It sure could. The greater issue to me is that all of these tariffs and everything that we are doing is decreasing demand for the U.S. dollar, as far as I'm concerned. And we've talked about Triffin's dilemma, how the White House understands that you'll always run a trade imbalance by being the world reserve currency. This is why China doesn't want to be the world reserve currency either. They would hollow out their manufacturing base. To be the world reserve currency, you always have to have, in essence, a strong dollar because you cannot give the world enough dollars to transact all of the things that they're doing with the world reserve currency simply through trade alone. So they have to sell their currency to buy ours, which pushes their value down, increases ours, which makes the offshoring of manufacturing logical because you can produce at a far less price with the weak currency and the strong dollar. We can buy much more. That's kept goods cheap and interest rates low and asset prices high. We're pushing back against that, and it's as if doesn't make a lot of sense. They know that is the issue of being the reserve currency. So I think it's part of a bigger picture of the rest of the world looking to alternatives other than simply settling in U.S. dollars and putting reserves in treasuries. Yeah, I mean, it could have an effect on importing of silver from these countries, but I think ultimately what it does is it just little by little, it's pissing off the world more and more and more and incentivizing them to find other avenues. Certainly not to look, if you were one of these countries who are whether you're our allies or our competitors, and we're competing for products, right, or for market share, you're going to want to buy our treasuries in this environment where we're inflating, we're passing rules, we're bullying, we're coercing, tariff on you, but not on our products, and we're going to inflate our way out of this problem. Would you buy the treasuries? I don't think I would, and I think that's really what this is boiling down to, is that instead of extending the olive branch, they're being punitive. So while it does have some short-term benefits, the money that we're taking in, ultimately long term, I think it incentivizes the world to move away from a single settlement, um, vehicle, that being the U.S. dollar, and certainly a reserve vehicle, that being the Treasury, which can be weaponized, which can be inflated, which can be sanctioned, in favor of gold, which is killing its production, or its production. It's doubled the production of the 10-year Treasury over the past 25 years. But look at last year. Treasury was up 4.5%, gold was up 40. Look at this year. At 4.5%, halfway through the year, it's up 2.25%, but the dollar's down 11% for a net return of 7.5%. Negative, whereas gold's up 38% or so this year. So it's destroying it, and that's the realization that much of the world has, I think, begun to understand, at least at the high levels. And that's why you're seeing stablecoin initiative, because these countries don't want the treasury anymore. So all of this stuff, it's a macro thing, and you can't just look at one piece. But I think gold and silver represent freedom from a matrix, freedom from the surveillance state, and look at its relation, like we were saying, to real estate. I think I said it with you. I may not. I do so many of these podcasts, but in 2005, gold was roughly $400 or in that range, and the average price of a house was $320,000. That's 800 ounces. So if you would have put 800 ounces of gold in to buy your house in '05, great. Well, what if you just paid for it and kept your 800 ounces, which for the past 20 years have earned nothing but dust? Those 800 ounces are worth almost $3 million right now. The average house is $420. So it buys you what? 8 houses?
Yep.
So the point of it is that you save in dollars, you're dead. And I think that's really the issue here, is that the rest of the world realizes that saving in dollars is foolish. Certainly saving your reserves and treasuries is dangerous. All of these things are going to change rapidly. So it's time to be a contrarian. It's time to realize that saving in dollars, you'll go broke. It's time to realize if you're not a contrarian, you'll be a victim. I think that's a very true statement right now. So I think people asking these questions understand it intuitively. It's just hard to make these decisions that your friends and family look at you cockeyed and say, why would you do that? Well, because I see the truth and the reality, and I'm not following the herd, into the pen. I hope that helps anyway.
I think it does help a lot. It kind of leads me over to this question here too, which is, is there gold in Fort Knox? Is there more than what we think? Is it maybe in a different location? Doesn't matter. And what happens if it's not there?
Well, it's supposed to be there at the New York Fed and at the Denver Fed. Even if it is there, could it have been rehypothecated, lent out, leased out for cash? And,
Yeah.
Maybe the fact that they haven't gone there, it's like maybe Jeffrey Epstein is living in Fort Knox. I'm not sure. The point of it is that the fact that they talked so much about it and then deviated from it is just like the Epstein files. They talked so much about it and then deviate. So whether it's legit or not, whether they're on both questions, it just inspires conspiracy theories. It inspires lack of trust. Is it there? I don't know. Maybe that's why they've imported so much gold since the beginning of the year, because they're trying to make up for it. I'm not sure, but it isn't right that they haven't follow through with it after telling everyone they're going to do it, and makes people think twice. And again, a system that's based on trust, if you do these things and erode your trust again, like we've been doing, this is why the world is moving away from us. They don't trust us anymore. When the dollar was backed and redeemable by gold, it didn't matter what the hell we said. You could redeem it, your dollars for gold at a fixed rate at 35 an ounce. Any country could have. Subsequent to 1971, the dollar's lost almost 100% of its value in relation to gold.
Yep.
The window closed at 35, and it's almost at 34 right now, 3,400. So that's 99.5+% of its value in relation to gold is gone. And you look at the missteps that we've made politically and geopolitically here, socially and morally, across the board, we've been laughed at. You know, or everything from that we talked about, election interference and lawlessness, and you know, the two-tier justice, election integrity questioning, all of that stuff, and it hasn't stopped. You know, you see people getting beat up and the media doesn't talk about it at this music fair in Ohio, and you're seeing, you know, again, just the left beat the hell out of Trump, and the divisiveness, and you know, questions now, was Comey and Clapper and Obama, were they involved in it? He seems to think they were, but the world is saying, see, more of that same shit. They can't get their act together. They're at each other. There's no unity. Everything is partisan, right down party lines. We've lost our trust. We used to be revered. We used to have a surplus. We used to, you know, not be involved in wars all over the world, and certainly funding them and all of these things. And these things are now being questioned. So, yeah, I mean, I can tell you that I wouldn't want to buy U.S. Treasuries right now of any duration, and I don't think the world wants to either. So, you know, again, trust your gut. If these things are even remotely true, look, I could argue that with the passage of the new stablecoin bill that the monetary system has changed already, because it used to be people wanted our debt, and it was an asset that they wanted to buy for its liquidity and for the trust they had in this country. And now that's nearly gone, and so we have to manufacture something that in a synthetic way recreates that debt. I would say we're at the ending stages of a new system, or of the old system, and the beginning stages of a new system that will spring up from probably this one legislation, this one bill, starting with stablecoins and probably ending with gold backing the long end of the Treasury bond, would be my guess. So anything that is considered traditional right now, I would be running away from, and I would look to being a contrarian, to being someone who is looking for value in places that no one else is, like gold, like silver, and you know, even crypto coins, because I do believe that Bitcoin in particular, they're going to try and push that narrative to inspire more demand for stable coins, which will be the only way you can fund the U.S. government's, you know, crazy spending habit when the rest of the world is growing wise to it.
I mean, a lot of Bitcoin's, you know, more recent price action just in the last year has come from that, basically. Tether, a lot of money coming into Bitcoin, and it's basically been another way to kind of keep the engine going. You know, and for me too, one of the things, I have cryptos, I have more gold and silver, but I like to also have, you know, some money out of the system as well. And when you do have cryptocurrencies, they are on a public ledger. It's still anonymous for the most part, except for the institutions that you have to trade in and out of because you have to do the KYC stuff. But, you know, now's the time for people to start doing some research about this, right? And like you always say, the two camps really should be coming together on this stuff. We have a lot of the same similarities. We have a lot of the same, you know, belief systems of sound money, wanting to have something that's going to be good for our kids' future and going after it. We just tend to go about it in a few different ways. But, you know, before we leave the Fort Knox thing just for a second here, you know, if it turns out that it's different, let's say they do audit it or some report comes out at some point, and there's a lot less gold that the U.S. is holding. Let's take it from Fort Knox. Let's just find out we do an audit overall and we have less than 8,200 tons or so, I think is what's approximated. Do you see that as being an issue for the country?
Of course. I mean, it's just it's a massive lie. You know, it's a massive lie. The whole foundation of the monetary system is our, truthfully, are the gold holdings. They are far less significant at the 42.22 price, but they've always been very upfront about the fact that we hold more gold than anyone in the world. Well, I would argue China probably holds 5 times as much as we do, just as we don't want to tell anyone and lift up our skirt, neither do they. But it would erode trust further. Again, this is a system based on trust or lack of trust, depending upon how you look at it. It used to be backed and redeemable by gold. The trust didn't matter. And during that time, we had no inflation and we had great productivity. And the minute we left the gold standard or closed the gold window, inflation began to run. And in my lifetime, in its relation, gold's lost 100% of its value, or pretty damn near it, 99.5%. It shows what happens when you allow politicians the ability to print money to their whims, and that's where we are right now. So yeah, I think gold would go parabolic, and the dollar would dump, and so would treasuries, because it would signal that everything we've been told is a lie. But you take a step back and look at all the stuff we've learned over the last few years and say, damn, that was all a lie. And then you take a look at the misreporting of our statistics, inflation and unemployment. Damn, that's all a lie. I mean, everything that we are being told by the officials is questionable, and that's the part that if we pull out that anchor that's supposedly been here for, since the end of World War II, this massive stockpile of gold, and we really didn't have it, and we've been behind holding it back. I mean, there's your Operation Sandman right there, just like that. The whole world would dump anything because, how can you trust? How can you trust? It's like your best friend is a chronic shoplifter. Are you going to ask him to stay at your house and watch your house while you're out of town? Well, he doesn't steal from houses. He just shoplifts every store he goes into. Well, so yeah, you're going to stay in my house while I'm out of town for 2 weeks, right? Not going to go through any of my drawers or anything like that, right? The point of it is that it spills over.
It does.
And it's a character thing. It's a huge character flaw, and I think our flaws have been exposed. And I think if that were to happen to that degree, we would never be trusted ever again, and rightfully so.
I agree. It is definitely a huge trust issue. But I'll throw it the other way too. As Andy said, guys, it's possible we have a lot more gold than we lead on to, and that we're kind of keeping it behind the scenes. It's possible we don't have it. I don't know. But what I do know is everything that's going on this year is it's a massive 3D chess game that's being played. A lot of what President Trump has come out and said has been testing the waters to kind of see how the market's going to react, to see how other nations are going to react. It's been a little hard to do some investing, not so much on the gold and silver front, but if you're in the stock market, you got some whiplash that goes on with it a little bit. But the reality is because of this, a lot of this exposure needs to happen because it's ugly that's going on. I think they're realizing all at once might be a little too drastic. They're kind of piecemealing things here and there, but they're starting to put a foundation in place that hopefully will allow us to not have a massive crash, to not have things blow up. But should things go the wrong way, I think gold and silver are going to be a very strong foundation for everybody, to weather it and then come out stronger on the other end. I also like to have some extra food around the house and water just in case things are crazy and I don't want to go to the store, and deal with it. Plus, I'm in California. We could have a massive earthquake and, we could have a lot of disruption for several weeks. So I always recommend that stuff too. Andy, I'm going to throw this up here real quick. Yeah, go ahead. Oh, yeah, thanks. Not my doing, but something that I hear out there that I subscribe to that I think's important for us. So one thing I want to do is just a plug for Miles Franklin. If you guys want to reach out to Andy, info@milesfranklin.com. Let them know Stacking Surfer sent you. It's the best way to get pricing from them, and the reason.
By the way, that price sheet that we will give.
Okay.
If people find items that are cheaper elsewhere, let us know. We'll do the best we can to make sure your people are getting the best price. And I do it this way for many reasons, and I don't want to post our best prices online for many reasons. And I know that's inconvenient for some people. There are reasons behind it. Please believe me. And one day I'll tell the myriad of reasons on a show. It would take an hour just to go through them all, and I have very valid reasons behind it. But when we do it this way, our attempt is to give your listeners the best possible price and the best white glove service and all of that stuff. If you find it somewhere, let us know. We'll do the best we can. If we can, we'll do it. There are some companies out there that may buy back backdated something or another and pay really low bid prices, much lower than we would. We have the highest bid price in the country, always, and then they'll sell it cheaper. That happens once in a blue moon, but typically our prices should be, and if not, let us know, and we will try to be as cheap or cheaper cost-wise than everyone in the country while providing the service and the white glove service that is unusual in this industry. So, not to mention we're licensed and bonded and never had a customer complaint. And that's why I left my company in Minnesota when I moved to Florida, because it is the only state that mandates that licensing and the bonding and the background checks annually. So we'd love to do business with your people, Jared, and it would be an honor. So yeah, when they send that email asking questions about IRAs or anything they hear you and I talk about, or just want the price list, just make sure you put in the subject line, heard about you from Silver Stacking Surfer, and we will make sure that they get treated the right way. You have my word on that.
I appreciate it, Andy. I would love to be the silver surfer, but trade right, copyright stuff. But I get called it often, and I think a lot of people are looking for it. But Andy, I want to thank you for jumping on, and hopefully we'll have you on here soon. For those of you that haven't done so yet, hit that thumbs up and the subscribe button. We'll have a live stream coming up later this week and a couple other great videos. And we'll also put this down into a little bit more of a condensed package for you guys too, if you want to recap to share with friends and family. And I highly recommend doing it. One of the reasons I recommend getting this set up with Andy too is if we get into a time where there's a lot of buying going on and people are wanting to hurry and get things, okay, it can take time to get these accounts set up. They've got to work with customers. They're filling orders. If you have it already set up, it's going to be easier. You'll have your contact person. You'll have their contact information. So I'd recommend at least getting things set up now, because there may be a time where you want to sell. There may be a time where you want to buy down the road. And it just makes it easier for you guys. So Andy, I want to thank you.
It's an honor to do so, bro. It's an honor to do so. And again, info at Miles Franklin. Let us know it came from Stacking Surfer, and we will not disappoint. And yeah, I look forward to chatting with you again soon, brother. And it's always good to be here. And thank you for letting me be a small part of what you're doing.
This is great. We love it. Thank you, guys. And until next time, peace out, guys. See ya.